Hello and welcome to our 34th edition of FSI Fridays. I'm Johansson live in Charlotte, joined by
Edwin in Boston.
Hey Edwin, what do we have lined up for today?
Thanks, Johansson, and those in the audience. Today, we're going to talk about the state of the capital markets industry and the acceleration of trends from an electronification to digitalization of markets perspectives.
Next, we'll talk about how Nasdaq is continuing to guide and empower customers, even building a game changer for startup marketplaces or innovation and expansion initiatives in order to get to the market quicker without infrastructure and resource headaches.
Third, we'll discuss the modernization timeline, vision, and the important role that the cloud plays with this transformation, and hear what's potentially in store for capital markets a decade down the road.
And then we'll wrap it up with Q&A.
Today on FSI Fridays.
For those of you watching live or on YouTube, as a quick reminder,
we'll spend around 30 minutes on today's topic and leave the last 10 to address any burning questions.
So please use the Q&A window and we'll monitor for questions during the presentation. So let's get started and meet our presenters for today. Edwin, who's our special guest this week?
Well, Johansson, we have another FSI Fridays first. We're honored to be joined by a customer and a very special one at that, Nasdaq. Let's start with you, Magnus. Thanks for being on the show today. Can you let the audience know what your role is at Nasdaq and what your typical day entails? We also hear that's not a New York accent you have there.
Oh, thank you for having me. Yeah, so my name is Magnus Haglind, and I lead the product management function in one of the business division of Nasdaq, the market technology business division. So that means that I oversee our product and services to the broader financial services industry and also our R&D efforts. So, and I'm born and raised in Sweden, but I actually lived a few years in the US, and I've been in 47 states. I have North Dakota, New Mexico, and Alaska to go.
That's awesome, Magnus. We're also honored to be joined by Kelly Petersen. Kelly, can you share with the audience your role at Nasdaq? And we also hear that there's a certain method of transportation we wouldn't find you using on your commute to work or anywhere for that matter.
Yeah, thanks for having me, guys. So my name is Kelly Petersen. My team manages the marketing for our commercial technology business, market technology, which we're going to get into through the course of this presentation. The fun fact about me is that I've made it 3 decades of life without learning how to ride a bicycle. So my parents apparently did not teach me, they did not teach my brother, and now I'm sharing that with all of you. So.
Thanks for sharing that, Kelly. I'm sure you walk really fast, so it makes up for that. Well, let's jump right in. Magnus, let's level set for the audience. So most of us know Nasdaq as a stock exchange, company where the largest tech stocks trade with a massive tower in Times Square. But that's not the angle you're coming from today. Can you touch on this?
Yeah, of course. So in addition to being a premier global listing venue, we have also over the years then grown into becoming a major technology provider to capital markets and beyond. So the business has been in existence for over 30 years, and our technology now powers over 130 organizations like ourselves, so marketplaces, clearinghouses, and CSDs around the world, and our technology is used in more than 50 countries. We also have more than 2,000 buy-side and sell-side organizations which uses our technology to protect their markets and their business. So we serve typically 3 main client segments. The first one is what we call them market infrastructure. So that's systems that are used to trade, to buy and sell assets, but then also manage the whole life cycle through surveillance, risk management, and then the delivery of that particular asset. It's important for us to protect market integrity and also detect and fight financial crime. So we have a strong position in the buy side and sell side client to provide anti-financial crime solutions to our clients. And they are now in use by more than 170 clients around the world. And last autumn, we actually moved to acquire Verifin, which is a major provider in the anti-financial crime space that is focused on providing tools to fight fraud and money laundering in the banking and credit union sector. And that was another important step for us to grow and expand our efforts to protect markets and fight financial crimes in the financial system. As we've seen that many industries have increased their acceleration to to digitalize their operations, we've also seen an influx from businesses during the last year to help them to reimagine how they transact with their clients and broader ecosystem. And that has manifested itself if they want to use exchange-like market structures, and they also want to explore how to introduce other dynamic pricing models into their businesses. And we are using our technology to help them as well. And that is what we call new markets.
Thanks, Magnus, for setting that context. I also recently saw that Nasdaq celebrated their 50th anniversary. So happy birthday, Nasdaq. So as the company that brought electronification of markets, you arguably started the digitization of markets. From a digitization perspective, what are some of the trends that you're noticing now that you're out in the field?
Yeah, so no, we certainly have 50 years now experience, and we can use that to also try to project what's going to happen in the future. But the industry have gone through many waves of change during the last decades. And if we go back 30 years, we had widespread electronification across different asset classes, and that was followed by a rapid globalization of trading, a lot of focus on low latency trading, and the growth of multi-asset trading around the globe. And then we all run into the credit crisis in 2008 and 2009, and that had a major impact of the industry, and that started a transformative wave, next wave for the industry. The crisis brought on a lot of new regulatory initiatives that created additional need for oversight and risk management, and a lot of firms spent the following years trying to implement new controls required to basically manage the risk, both from a central market infrastructure standpoint, but also from a market participant standpoint. That required that they invested heavily in data analytics and also in their infrastructure to adopt to new regulatory requirements. After, I would say, 5 to 7 years into that, we started to enter a next wave of change in the industry. And here, technology had an important focus. And that is similar to what we've seen in other industries, where new technologies are maturing and starting to be used. So during the last 5 years, I would say that we've seen firms testing out DLT-based technologies, machine learning and AI, and of course cloud, to see how they can improve and change the way they are operating. And as we look ahead, I would say the pandemic has accelerated a lot of these tech-infused trends, and we are seeing organizations now reevaluating how they are using technology across their enterprises. And with a number of these regulatory regimes in place, people have investment and also time to spend on thinking about how to transform, and also a greater appetite to change legacy architectures and infrastructure. So what we are foreseeing now is a major transformation using cloud technology to fundamentally change the traditional on-premise based architecture and message-based architecture we have in our industry into something very different going forward. And in addition to cloud, certainly data and data analytics are important measures for us to both run and protect our markets in an efficient way.
Well, Magnus and Kelly and Nasdaq, thank you for playing such an influential role with the modernization over the years. Kelly, this one's for you. So based on this data, can you elaborate on the findings, specifically on the timeline and vision of modernization for financial services organizations?
Yeah, for sure. It's actually a great timing for the question. We are in the throes of finishing a market research study with a research and advisory firm called Celent, which many of you that are watching this may have heard of. So together, we're going out to CIOs at market infrastructure organizations, which include exchanges, CCPs, and CSDs, and finding out what is top of mind for CIOs right now. Where are they investing their money? What's on the horizon from a trends perspective? And so going back to what Magnus said earlier, we have some preliminary data from the study, which we have visualized on the screen for you. So participants were asked on a scale of 1 to 5, how would you rate your organization in terms of modernization? And again, going back to what Magnus said earlier, a lot of the firms have had more bandwidth and mind space, like coming out of the credit crisis and really having room to look at reimagining their tech stack. And you can see that reflected in the data. So right now, of the respondents we have thus far, 55% of them score themselves at a 4 out of 5 on the horizon of modernization. But you can see over the next 3 years, there's going to be a ton more work going on at these firms, where you see 17% of those 55 going to 100% modernized tech stack, and then up to 75 at a 4 out of 5. So I think you can deduct from that data that SaaS and cloud are really going to play a huge role as we move forward in making that happen.
Thanks, Kelly. So Magnus, this is a great segue into the importance of cloud. While capital markets have led the digitization and broader digitization in many aspects, the industry has been a laggard from a cloud adoption. What are you seeing these days?
Yeah, no, it's a lot of good reasons for that being a bit behind, and certainly because financial services is one of the most, I would say, stringent, controlled, and regulated industries on the planet. So it's important for us to protect safety of our investors and also the broader economy. So a lot of organizations have been working to move, I would say, non-critical pieces of their workload to cloud for the past decade. But based on the chart you can see here, it's not just Nasdaq that is moving towards cloud. A lot of the clients are now feeling that the maturity is growing, and also the acceptance among regulators and others to actually adopt cloud. And as I said in my previous comment, COVID has been a massive accelerator for those efforts, as capacity and access to compute has been a scarce resource. And therefore, I think everyone is now exploring not just how I can use cloud more, but also transition into more of a SaaS-based environment. So we see a perfect storm now in this year to accelerate those trends. And it's also other participants coming to market, and when they are coming in, it's important for them to get access to infrastructure and compute, and our SaaS-based services is then attractive to them. And certainly during the thanks to the investments done by you and others into infrastructure and hyperscale infrastructure, resiliency and redundancy that comes with cloud is also starting to be very recognized by participants in the market. And as the maturity grows and we learn how to use these tools, they will become a natural part of our infrastructure.
Magnus, thanks for sharing that. And, speaking of resiliency, a recent example of how cloud has helped many financial services organization was around that freeze that happened in Texas, for example, where financial services institutions had they didn't have their on-premise servers, but they had their database in the cloud, and that helped with their business continuity. So it's great to hear that you believe cloud will play a major role in an effort to modernize and digitalize capital markets. What are you seeing now?
Yeah, thanks to the progress and we've seen in the investment that you have done into cloud, but also thanks to a lot of the open source technologies and a lot of the innovation that we see around that, I think we are now starting to also change how we run and structure our application in cloud. So you see adoption of microservices in a much broader way compared to earlier. So containerization is important for us in order to better orchestrate and instrument our and deploy our application going forward. Another important area for us is certainly serverless compute, to also move towards much more of an on-demand service experience. And then we will see also in financial services more adoption of what I would say edge computing to combine lessons learned from 5G and Internet of Things in order to create new infrastructures that is not just based on cloud, but also edge. And for us at Nasdaq, we actually started our journey for cloud in 2008, and we have over time experimented with cloud as an infrastructure, as an operating model, and as a platform. And we have moved surrounding systems such as market surveillance, market operations, billing, and transactional data to the cloud, and have been, I would say, pretty good at operating those infrastructures. But over time, we will also see more mission-critical infrastructures to move there, and that will allow us to fundamentally change the way we serve clients going forward.
Thanks, Magnus. It's great to see the journey for Nasdaq and how the cloud is a focus to make enhancements and advancements. But Kelly, can you explain what Magnus meant by customer centricity?
Yeah, so the types of participants we're seeing is changing rapidly. We're starting to see a lot more retail-based, tech-focused participants that are born in the cloud. And similarly, in the marketplace space, there's all types of new digital marketplaces that are also born in the cloud. So as traditional banks and market infrastructure organizations, we can't necessarily take a legacy way of interacting and transacting because we need to meet these organizations where they are. So two ways we're addressing this at Nasdaq is through our Nasdaq Cloud Data Service and also through our Marketplace Services platform. So our Cloud Data Service, which we lovingly call NCDS, is a product that we launched last May, and it enables investors, data scientists, and other buy and sell side organizations to access APIs from our data products in the cloud so that they can take advantage of the API economy, but also read the data much more efficiently. So that's been a really huge innovation over the last year and really good pickup thus far. The second offering that I mentioned is the Marketplace Services platform, which is actually part of our business unit that Magnus and I represent. And it is an end-to-end marketplace platform that addresses functionality across the trade lifecycle silos and enables interoperability in the cloud. So, and that's really a game changer because it enables new marketplaces to come to market a lot more quickly without the cost and complexity associated with hiring skilled resources, building out your infrastructure. And we also see really big benefits for this for traditional operators who may be looking to launch innovation initiatives such as spinning up their own digital marketplaces. So those are just two ways that we're addressing this at Nasdaq.
So, you've created a new marketplace concept that's going to disrupt your industry. Shouldn't that be the hardest part of entering the marketplace economy? Well, how are you going to build your marketplace? You could do it yourself. You'd spend countless hours finding the right vendors, racking up millions of dollars in expenses, hoping you've acquired the right hardware and physical infrastructure. And then you'd need to seek out experienced marketplace IT staff to keep your systems operating. There's a better way. Introducing the Nasdaq Marketplace Services Platform, a fully SaaS end-to-end platform purpose-built for marketplaces in multiple industries. Fueled by decades of expertise and technology know-how, Nasdaq's Marketplace Services Platform provides all the services required to operate a market, create and issue new assets to be traded, safely match your buyers and sellers at speed and scale through a variety of market models, efficiently settle transactions and digitally transfer asset ownership. Protect your market with robust monitoring capabilities, all on a single platform. Whether you're a startup marketplace for tokenized or digital assets, a capital markets player looking to rapidly deploy an innovation initiative, or an established organization implementing marketplace-like structures to transform your business, Nasdaq's platform can take your business in bold new directions. With flexible APIs and a fully cloud-deployed platform, you can strengthen interoperability across your ecosystem, rapidly build out and scale end-to-end business processes, and accelerate your marketplace journey, getting to market quickly, efficiently, and before your competition. The Nasdaq Marketplace Services Platform. One platform to meet all of your needs.
Hey, Kelly, it's great how Nasdaq is pivoting and staying agile to address customers' needs of today and tomorrow. So let's dig into that marketplace services platform a bit more, as I know this is an initiative you've worked on with Microsoft. We know there are still some advancements required to get matching to a place where equities markets are operating in the cloud. How do you see your platform working for capital markets?
Yeah, absolutely. So Microsoft is absolutely an important partner for us, and the Marketplace Services platform is deployable in Azure. So to answer your question, just going back to what I said prior, we really do think that as traditional market infrastructure operators are starting to look at their value propositions and how they differentiate, this platform can really be the foundation of helping move initiatives to market a lot more quickly. So going back to the Celent study that I mentioned earlier, the number one reason reference for why these market infrastructure operators are modernizing and digitizing is so that they're more easily able to launch new products. So if we think about these new investors that are coming to market, they might not want to invest in the traditional assets that we have today. Like they might want to try, new things like some non-bankable assets. So we see a lot of activity in art or real estate or collectibles, and these exchanges really need to be better positioned so that they can launch new assets in the future. And when you look at doing this in the cloud, it's much easier to adjust experimentation, which is something that has been traditionally a pain point for exchanges. So, you have to go out, acquire the infrastructure to spin up the test, have the resources to do that. But in a cloud environment, if you're doing this on our platform, it's something where you can test your ideas more quickly. And then if it's something that's successful, you can very quickly do a cost benefit analysis and then decide if you do or do not want to bring that to market instead of, taking so much time. And then, of course, out of industry is where we're seeing a ton of interest, and we're actively selling the Marketplace Services platform into many other areas. But for the purposes of today, I'll just plug that we do have another webcast in the next few weeks coming out with Microsoft. So we'll leave that discussion for a later point.
Thanks, Kelly. It's interesting how you talked about leveraging the cloud to develop proofs of concepts, to test it out, and that rapid pace of innovation that can really happen and experimentation. So this has really been an interesting journey through the current environment in capital markets. Magnus, if you had to predict the next decade, what does it look like?
Yeah, that's an interesting question. So I would say if you look across our client segment, I would say everyone working with 3 horizons now. I mean, they're focused on optimizing core. So how can I use technology to optimize my core to improve operational efficiency and reduce cost? The second is that everyone is thinking about how should I reorganize my business model? Can I rethink it? Can I serve my clients differently in order to prepare for tomorrow? And then the third horizon, which I think people are starting to think about, is how should I reimagine my markets and my ecosystem? And that will fundamentally then change the way I operate today. And I would say cloud and new technologies will enable that. We think will have the same impact as, I would say, electronification had of markets 30, 40 years ago. So we are standing in front of a major change in regards to how our markets will look like and operate going forward. So from a tech infrastructure perspective, I think it's 3 dimensions that are important that we have discussed today. First is robust data management. We need to remove barriers and making data available, not just end of day, but for real-time decision making. The second thing is rethinking client experience. And in our industry, a lot of client experience have been focused on user interfaces, but with, I would say, the adoption of more modern APIs become front and center also of the user experience. And then the third one, which will have a major transformative effect on our industry, that is our application services architecture, and how to use cloud in order to run our infrastructure in a very different way going forward. And I would say if we are successful in executing on all these things, we will be able to unlock an incredible amount of intelligence that will help to power the next decade through transformation. I would say able to lower barriers to entry for new participants and also allow better interaction in our ecosystem and make markets more accessible and inclusive for people all around the globe.
Magnus, thanks for sharing that. This has definitely been an interesting chat. And I really love how Nasdaq is thinking about how to support new players and tomorrow's ecosystem. So, I think we'll be celebrating Nasdaq's 60th birthday, a decade from now with great success as well. So thank you for that. What do you want to leave our viewers with as you depart today?
No, I think the current environment and the pandemic had sent a clear signal to industry participants. They needed to invest in tomorrow today. Capital markets are a critical part of our economy's well-being, and without investments in our technology foundations, we're putting a lot at risk. So they need to start to think about tomorrow's ecosystems, and how to serve tomorrow's clients. And when they are making those important platform decisions, they also need to reflect upon the core competencies and what they have inside and outside their organization. And I think that's why SaaS solutions and cloud can play a huge role in kind of reinvesting scarce resources and help organizations to build their businesses and their infrastructures in a better way.
Magnus and Kelly, thank you for sharing your time and perspective. I'm positive our viewers have learned a wealth of valuable information. So what we learned today is over the past several years, capital markets players have grappled with the ability to digitize and better interact and transact with their constituents today while preparing for tomorrow's markets. COVID-19 has accelerated this journey.
We also discussed the Nasdaq Marketplace Services Platform, which is an end-to-end platform designed for the rigorous regulatory, reliability, security standards of the financial services industry, so organizations can safely and efficiently create and launch new marketplace offerings with reliable scalability to adjust as the business grows and evolves.
And while financial services are one of the most regulated industries on the planet and haven't taken more gradual approach towards cloud adoption until recently, the cloud journey is essential for the next 50 years of trading to be successful. So really great stuff. Johansson, let's move to Q&A. What are some of our viewers asking?
Thanks, Edwin. So we've got a question in here from Anonymous. Do you think we will get to T+1? Magnus, do you want to take this one?
Yeah, so I think the T+2 and T+1 settlement cycle is an interesting one when it comes to modernization of technology. And I think the recent discussions around GameStop and the implications of that have certainly put additional light on that. So yes, there are a number of both operational blockers and technology blockers around that, but I think we will have much more discussions on how T+1 can reduce risk in the broader financial services system over the next couple of months. So yes, I think we're going to see an acceleration towards T+1 during the next couple of years.
Thanks for sharing that, Magnus. So we have another question here. When is Nasdaq going to the cloud? Kelly or Magnus, who wants to take that one?
You want to put me on the spot?
Yeah, I can put you on the spot.
Yeah, sure. So, I mean, just going back to some of the comments that Magnus made earlier, Nasdaq has been in the cloud for over a decade. I think arguably we were probably one of the pioneers, not just as a market infrastructure organization and operator, but also just across the capital markets industry in general. So, like at this point, we've moved quite a bit of our infrastructure into the cloud. As Magnus mentioned, we've moved some of our surrounding systems like market surveillance, and also some of the areas for market operations, but we've also moved some of our commercial offerings. So, going back to the Nasdaq Cloud Data Service and the Marketplace Services platform that I mentioned earlier, and even as part of that platform, we are actually doing matching in the cloud. So matching in the cloud is not ready yet for high volume, high velocity securities and assets, but for some of these non-bankable assets, like this is an area where we can actually do this today. So there's definitely some challenges, as I just alluded to, just in terms of performance and making sure that we can meet the same standards we do today for our customers and for the entire ecosystem. But Nasdaq has gone out publicly in the past and said that we fully expect to bring our markets to the cloud over the next 5 to 10 years. So hopefully that is an answer that is acceptable by you all.
Thanks, Kelly, for sharing that. So we've got another question here. I think this is related to the market services platform, but what new assets are you coming across that aren't widely traded today?
Yeah, so that's a really good question, and I would say thanks to the growth in cryptocurrency and the interest in cryptocurrency, we've also seen a major trend to digitalize and tokenize new assets. An example of that is real estate or non-bankable assets such as art and classic cars, etc., in order to provide opportunities for investors to invest in new assets in an efficient way. And so we expect to see more of both traditional assets to be tokenized, but also new non-bankable assets to come to market.
All right, well, that's great. Thank you, Magnus and Kelly, again. This has been a super informative session, but it looks like we're out of time. So thanks again for attending via YouTube or watching live and asking questions.
If you haven't already, be sure to subscribe for FSI notifications and invites by visiting aka.ms/FSIFridays.
We're also open to constructive feedback, so please send us your comments and suggestions at aka.ms/FSIFridays feedback.
Be also sure to catch our recordings of our previous sessions on our FSI Fridays YouTube channel at aka.ms/FSIFridays recap, where you can also post any follow-up questions that weren't covered today.
And don't forget to subscribe to our YouTube channel. Joe Hansen, we have one more awesome episode for the last Friday of March. What do we have lined up next week?
Definitely. So on March 26th, insurance carriers are struggling with demands to optimize their risk modeling operations, gain insights from their data, and address ever-changing regulatory demands. We're going to be joined by Alan Brockman and Brian Cartwright to discuss how to address those challenges with cloud compute. You won't want to miss it.
Thanks, and see you again next time
on FSI Fridays.